coming for the first post-COVID event. I mean, this is take a moment to celebrate. It's been a couple of years since anyone's really done this. I'm Paul Ebner. I'm a portfolio manager and researcher with One River Digital. I started that job 3 months ago, having been in traditional finance. And part of the reason why I'm here is going to meetups like Bitcoin Bay, DeFi Toronto with Victor, and just all of the sort of engagement that this group and this community has given. We're really excited at One River Digital to launch an office here in Toronto as of the start of this year. Marcel Kasimovich is our head of research. You're going to see a lot more of us. We're going to be co-sponsoring these events going forward on a once-a-month basis. And we just want to help contribute to the community. That's really the only goal. Toronto's got an amazing scene. We just want to be part of that and help further it along. I'm going to give a quick intro for Marcel. Marcel's going to introduce our guest, Brian. Marcel Kasimovich is someone who's got over 25 years of experience in financial markets at storied organizations like Goldman Sachs, the Soros Fund, the IMF, most recently hedge funds like Woodbine and C Capital. And he is our head of research, and he's a huge reason why I'm part of One River Digital. He's just an incredible person in terms of knowledge and just generosity, and I've really enjoyed working with him. And I know tonight it's going to be a fun conversation, and he'll give an introduction for Brian.
All right, are we good? My intro for Brian is super easy. We're neighbors. Sure, and I had the good pleasure of meeting Brian and learning a lot through him about Ethereum and its properties, and quite admire the work that you guys have done with Future Capital as well. But I thought I would just let you start it off by telling your story. I mean, look, we've all lived through all sorts of different cycles in the crypto space. Brian's been engaged in the space since 2013, and I thought just a great way of living through those cycles is just to hear the story through your lens. Your story is a great one, so I'm sure everyone would love to hear it.
So hi everyone, my name is Brian. I actually first heard about Bitcoin in 2012. I'll give like a kind of where I got to today and what we're up to with Capital. First heard about Bitcoin in 2012, going with a friend to buy a used iPad off of Craigslist, and the guy was selling everything he owned, house, BMW Z3, for something called Bitcoin. We left his place thinking he was absolutely insane. Had never heard of Bitcoin before, drove away and said, I don't know what this thing is. I'm someone who's always been interested in anything tech related. I've always wanted to push any button, play on a computer, early internet adopter. And so for someone who has no life and lives on Reddit, I guess I'll look up this thing called Bitcoin that this guy was talking about. And I think like a lot of people, even today, they hear of Bitcoin or cryptocurrency and their initial reaction is, I don't get it, too complicated, seems stupid, seems insane, and they put it in a drawer and they go away. And I'm proud to say that I did the same thing. I completely ignored it and said, this seems kind of interesting, but I don't really know, and so I ignored it. And then in 2013, it kept popping up on the front page of Reddit, and I kind of went back to that white paper, and there was clearly, on Reddit and a website called Bitcoin Talk, which was a forum, an early forum, there was clearly this very passionate community of people who were debating monetary policy, distributed computing science, how you could create some type of token that would be native to the internet as a mechanism for payment. And they were clearly very passionate about this, and they didn't seem that crazy. They seemed smart. And so I started really digging in and doing a lot of research and getting interested with a friend of mine to kind of piggyback off each other's knowledge and see what we were finding, articles, whatever. It's really hard to get good information early on. And around that time, someone mentioned Anthony DiOrio, who's an early member of the Toronto crypto space and was really responsible for putting together a lot of people who are in the city and interested in this stuff. There were meetups that he was running. And in 2013, it might have been 13 people, in a bar somewhere, Bloor West. And so I went once, and people were really excited that they found a way to match a Litecoin address to their Bitcoin address, the last 4 or 5 characters, and everyone laughed. And I'm like, that is so cool. But there's other people around, who are excited by this stuff. And my family was not interested. They're like, this is stupid. Stop talking about this at the dinner table. And so, finding community early on, people who were excited by this seemed really promising, that there were other people out there who saw the potential of where all this was going to go. And we were all very pie in the sky dreamers back then. People were saying like, one day you could do file storage with this, or you'd be able to execute more complicated things. NFTs originally were kind of referred to as colored coins, or master coin, I can't remember, on Bitcoin in 2013. So there was all this like debate and talk about what this technology could enable. And around this time, I met Vitalik, and he starts talking about Ethereum, and I read the Ethereum white paper, and I thought that was just completely mind-blowing, because Bitcoin is a 0 to 1. If everyone here has read or should read Peter Thiel's 0 to 1 book, Peter Thiel talks about technologies to displace something need to be a 0 to 1. They need to invent a new category or be this order of magnitude better or different than what the existing incumbent would be. And so Bitcoin clearly does that. Bitcoin invents an entire new category. And when you think about, why did Litecoin not become the thing? Why did Dogecoin not become the thing? Although maybe Elon will make Dogecoin a thing when it's the currency on Mars. But, when you think about, I read 0 to 1 years later. When I think about what 0 to 1 talks about, it's really clear that everyone was going on GitHub, which is an open source repository where you can copy the code, you could deploy it, you could rename it, you could tweak around a recipe. Litecoin was not a 0 to 1. It wasn't this order of magnitude of improvement over what Bitcoin had done. And so it wasn't enough to rally a community around that technical set of specifications. And so I actually like this analogy because it kind of frames for me, why am I so stuck on Ethereum and I'm not looking at all the other smart contract platforms out there. It's not that I think that they're going to go to 0. It doesn't mean that I think that there's some really interesting things that they're up to. I just think that Ethereum comes along in 2014 and again invents a new category. This idea of a smart contract platform just hadn't been built before or contemplated, and that was enough of an improvement to inspire a developer community to rally around this set of technical specifications. And so I went down the rabbit hole on Ethereum, again with my friend, started reading everything about it, trying to talk to anyone who thought it was really interesting, and then was looking at things that would be competitive to it, that would displace it, that would be complementary to it. Just now I'm like fully in the space, wanting to find a way to work in it, but it's not clear what the jobs were at this point in time. And to this point, the access points for any investor was largely unregulated exchanges, they weren't called self-hosted wallets. This is like a term that comes about years later from regulators and financial institutions, but it basically was go get yourself a little USB key, a Trezor or a Ledger, download some software, which for Bitcoin for me was Electrum or Bitcoin QT, if anyone in this room knows what that is. No?
The original wallet download with the entire blockchain.
The amount of pain to sync that wallet was just excruciating. But there weren't access points for that other set of investors. And so the way I think about Ether Capital, which I'll get to in a moment, is in the early days of crypto, that kind of 2009 to 2020 era, there were only access points largely for people who were comfortable touching the asset direct, which is an important thing. I mean, I was talking to someone earlier who was saying, we need more people comfortable with self-hosted wallets, understanding how to secure a seed phrase and interacting with DeFi and these protocols through direct smart contract interaction versus asking some third party to do it on your behalf. But it also left out another set of investors, which was anyone institutional, anyone who was from a generation maybe where they weren't comfortable with it, or they just wanted a way to bet directionally on the price of the assets. There wasn't an access point. There was no way for them to just spec on the price of Bitcoin. And so in 2016, I helped a friend build a lending business that would facilitate loans to margin traders on Poloniex, which was a very early poop coin casino. I don't know if there's a video cam of this. I don't know if I'm allowed to swear or not, but Poloniex was like the original Binance. There actually was one called Cryptsy before it, but I helped a friend build this business and that got sold. And around this time, There was talk from the CEO of a company called Purpose Investments, who builds a lot of structured products outside of the crypto space, was watching the 2017 ICO boom. This was people issuing tokens on Ethereum, the price of Bitcoin's going from 3,000 up to 20,000, and saying, how do we create an access point in the capital markets to help isolate that signal from all the noise? And so they put together this company called Ether Capital to try and help people who wanted an investment access point through a brokerage account to follow a group of people who were a blend of crypto natives, a group of venture capitalists, some people from traditional finance, with this thesis around Ethereum was going to be this very important piece of technology and layer of the internet. We don't know what it's going to be yet, but something's clearly happening here. And so I wasn't actually part of the company when it was formed, but I came in a number of months later, around July of 2018. This was amidst the beginning of a quite brutal bear market, but instead of the 2014 bear market to 2016 era bear market, now I had a job title and some branch presentations I did to institutional investors saying, trust me, Ethereum's gonna be big, and they're like, it's $80. He said that at $600, so what do you know? But we always remained, we kept our conviction that Ethereum and like all of these assets, all of crypto was going to be valuable at some point because the value proposition is just way too strong. You're looking at these open networks that are mesh network, bottom up, what I would call true open banking, like potential against these very top down Bank of Canada, Federal Reserve, distributing their currencies through the commercial banks and pushing down what services you can touch and what you can participate in versus this open, beautiful network. And so I'm like, this thing has to win at some point. I just don't know when. And so Ether Capital made a kind of a handful of investments into some key pieces of infrastructure. We worked with Purpose to put together the world's first Bitcoin and Ethereum ETFs. Again, so that when you think about this barbell of access points, there's people like me who might say, sure, I'll hold $5,000 on a USB key, but I know that my mom or some of my friends who aren't in the crypto Kool-Aid rabbit hole, they want to buy the ETF. So it's important to create these access points for people at different ends of that spectrum. And then thankfully, I don't know that you can say that about COVID-19. Is that a thing? I don't know. It really changed the narrative, I think, to the mainstream, where people who had written off the idea of algorithmic or software-based monetary policy as they're concerned about inflation said maybe this asset class, first of all, it didn't die, despite a 50% drop whenever the OPEC crisis happened. I mean, that was quite painful. That was not a fun day. But the space didn't die, and the developers never left, despite what most of the mainstream is reporting, that the price of Bitcoin is $3,000 or $4,000 down from a $20,000 high. What they're not reporting on, though, is that the community never disappeared. The developers didn't stop biddling. There was DeFi applications forming, stable coins getting issued on Ethereum. All that stuff continued to happen. And so this new group of investors in that second half of 2020, when they're concerned about inflation, are looking for escape valves. And one of the escape valves this time around were, one of them was crypto. And obviously we all know what happened to Bitcoin starting in that second half of 2020. Bitcoin halving event takes place, which is the block reward. It's cut in half. Ethereum 2 in phase 0 goes live at the end of the year. The ability to generate yield, it's not quite fully rolled out yet, but there were some catalysts in 2020 that were really positive for the space with this backdrop of investors concerned about inflation. And at the same time, you then have closed-end funds in Canada getting greenlit on our exchanges. So there was a Bitcoin closed fund that 3IQ got through the gate. Sam and I started working with regulators on could we do a true spot ETF. And so it's a very different space for all participants, for the actual open source ecosystem, for the institutional investors. And I think it's become clear now that there's more infrastructure than ever before. When investors ask me why crypto now versus 2017, what's different about this bull run, or are we in a bear market? I say, look at all the infrastructure that's been built. You have structured products now, you have insurance products emerging, some on-chain, some off-chain. The off-chain ones aren't fantastic yet, but they'll get there. There's custody, there's audit firms that are comfortable auditing the space. There's still a lot of work to be done to advance the space to the next, $2 trillion to $10 trillion asset class range, but the foundation is being laid now. And that to me is really exciting, that if you can abstract away your stomach to the price and just focus on the developers and the activity that's taking place, it's getting really interesting. And there's certainly a lot of challenges ahead. And at Ether Capital, we're one of the first in the world to stake a significant portion of Ether. I think we have about $100 million now sitting on ETH2 and intend to stake more. We're looking at some kind of core infrastructure that we think the space will need for traditional finance to really adopt the asset class and to have it integrated into their current systems. So it's a really exciting time for anyone who's not working in the space yet, but thinking about it. There's the design canvas is just so wide of everything that needs to get built that there's just infinite opportunity to be part of this community that is really open and friendly, despite on Twitter people hating on each other and saying like you're totally wrong, here's 17 articles to prove you wrong. The reality is we all get in a room and we're like, oh, is it gonna be awkward when I see him in person because I shat on him all over Twitter yesterday. But it really is a very open community of people who all see the world the same way, that people should have the right to these digital bearer asset forms of money and get to choose and be able to interact with DeFi or NFTs that, despite the rest of the world thinking it's crazy, it makes no sense, it's high risk. Let the people decide if they want to take on that risk. So it's a really great time to be joining the space, and I'd encourage anyone who's thinking about it to talk to other people here, reach out to me, reach out to anyone, and just meet people and network.
Wow.
So that's how I got here. That's my story and how
awesome.
how I'm viewing the space.
Let's see. This is the gift. This is the grab bag, the gift bag. So that was an excellent start. So in the grab bag, we're gonna have some fun in the grab bag. I just randomly selected something out of the grab bag, and it's speaking of community. I don't know. Nick Carter's a terrific member of the community, and he's sporting a very handsome mustache these days. And just in case, for your participation, gift one is the emergency mustache kit, and they are sealed for extra freshness. So we'll start with that. That's stage one.
Are we supposed to put this on now? Really what this is when the price retreats down another 80% and I change job. This is aren't you the guy from Ether Capital? Like, no, I'm his twin brother.
Sealed for freshness.
Wasn't there a good the Curb Your Enthusiasm episode where that's your brother at the restaurant? No, it's not my. Sorry if no one watched.
We were going to throw them out to the crowd. So I'm just going to run through some sort of a thematic discussion, and then if there's questions as we're going along, I'll try to keep my eye out for them, or we can do them at the end as well. But so that's a jump off point to just give you a sense of the cycles that Brian's lived through. My background is a little more traditional on the macro side. I started dipping my toes with Bitcoin in 2012-13 with a very different experience. I had no idea what I was doing, and I just had to convince myself. And I was surrounded by people that thought it was a really bad idea to touch it. So I was surrounded by buddies at central banks and folks in traditional finance. So it's a different story, but it's living through that cycle is always super interesting. Now, first thing, crypto. The convention is to think of crypto as somehow anti-fiat. And an alternative narrative is just to say, look, the fiat is in the government, it's made for itself, vis-a-vis the policies that have been implemented, so on and so forth. Can you be pro-crypto without being anti-fiat?
I think, again, you've got this spectrum of people, some who want nothing to do with government-issued currencies and want to go full in on Bitcoin and try and find a way to build a life around how they would interact with the real world, meat space world, using that as their currency. And then I think there's people who are pro-crypto because they see that the two assets can live side by side. And maybe there's a third group who, I haven't really thought deeply about this question, but maybe there's a third group of people who see the innovation and the potential for these, base layer protocols to give rise to all sorts of different methods of payment, alternatives for wallets, Some might say it's a hedge against things, but then some might say it's the quote currency for NFTs in the metaverse. You know, a new vertical that is not going to have the assets priced probably in USD or CAD. It's going to be priced in ETH, or it'll be priced in Sol, or it'll be priced in, you know, whatever platform it exists on. I think it's too early to definitively say what these things are going to be, but I think you can look at it and assume that they're here to stay. Which one will be the winner? I don't know, you know?
Yeah. I mean, look, in traditional finance terms, longevity is alpha, right? If you survive, you have an opportunity to generate alpha. And think of what Bitcoin lived through for your observation on survival. You had an immediate sudden stop of Chinese mining that took down the industrial capacity of Bitcoin by 50%, and it survived. I mean, so if that were not a test of the virtues of digital, but Bitcoin is in particular, that's it. So the longevity point that you've been bringing up is super important. A shift to the future. Ethereum merge. So I mean, folks in the room are probably quite familiar with the fact that Ethereum is going through this remarkable upgrade. I mean, it may be the most incredible upgrade of a technological protocol while in motion that we'll ever experience. So far, so good, I would say. Your views on the merge, and what the hell is taking so long?
Well, first of all, show of hands, does everyone here know what the merge is? Sorry, let's do this another way. Does anyone not know what the merge is? Okay, a few people. So a quick TLDR on this is Ethereum right now uses proof of work for mining. So this is people spending, you know, computing hardware and electricity in exchange for the opportunity to create the next block, receive the portion of the transaction fees, as well as the newly minted Ether. Ethereum 2.0 has a number of upgrades, but largely it's driven by this. Let's replace the proof of work mining with the ability to stake the native asset, Ether, into effectively a bond with the protocol, and then take turns in a round robin-like fashion. You know, one thing that I really like about this is that it aligns the incentives of the validators and the token holders, which in Bitcoin, they can kind of be separate, right? You could not be a holder of Bitcoin, but say I'm performing this meat and potatoes business, and I'm just arbing the cost of electricity because I have access to something at 1 cent a kilowatt hour versus someone else at 4 cents a kilowatt hour. In proof of stake, you are asking the actual token holders of the network who are long the asset to put that at risk in exchange for validation opportunities and to receive these rewards. ETH2 rolls out in a couple different phases. Phase 0, which is live right now, there's none of the exciting activity taking place on ETH2. So the current form of ETH2 is basically, you know, this wireframe airplane being built right next to an airplane with a $350 billion, you know, protocol with all this really exciting activity taking place, which you could think of as the passengers. And the merge is this event where they're asking all the passengers, everyone who's in DeFi, everyone who's touching NFTs, everyone who's holding stable coins and holding the native tokens, you know, you're gonna switch airplanes, but we're gonna be in the middle of the air, and you're not gonna be able to not get on the plank and take the walk. You're gonna have no choice. So it's a really big technical upgrade. It's really exciting, and you need this to work. And so people were hopeful that it would take place, this event, the merge, in spring of this year. It's been pushed out by a few months. I mean, I don't really track the dates of these things in any meaningful way. I mean, my answer is it'll happen when the developers, who hopefully are less driven by financial incentives and more concerned with, you can't have this airplane blow up midair. That would be a complete disaster for a lot of crypto, not just Ethereum. I think a lot of smart contract platforms and just the whole space will take a nosedive. And so it'll happen when it's ready. But this is a big event because when that activity moves on to ETH2 and they turn off proof of work and you're left with proof of stake, you know, the opportunity for investors to generate yield, which on the low end is probably, I mean, no one really knows, it's a little finger to the wind-ish, but you know, it's probably on the lower bound, 4%. It might go as high as 15% when you have periods of high transaction fees taking place on the network. And so I don't know, a blended rate might be 7% in the end. But that is a real opportunity while everyone currently is looking for ways to generate yield. that if you're someone who's long these assets and you don't have this short time preference, you know, you're looking at this as an asset you want to hold for 3 years, 5 years, 10 years, and you believe that the world is going to be built more on top of these networks, then collecting this 5 or 7% yield along the way is just an incredible opportunity. Plus some of the transaction fees will be going to you. There's some mechanics around what will happen regarding the monetary policy will change a little bit. And you also won't have the sell pressure from the Ethereum miners who are covering the cost of the electricity and computing hardware. You know, they're also selling some for tax, but that sell pressure is going to disappear. And most people, I think, will take this opportunity to like recursively just be staking ETH, taking the yield, restaking it, or doing nothing and having their account just go up. And so it's a really big moment for Ethereum because you've got this monster-sized protocol doing this technical upgrade that there's never been a network before that has transitioned from proof of work to proof of stake. We've seen proof of stake networks go live, you know, from the Genesis block, and they're okay, but we've never watched this transition happen. So, you know, let's hope for the best, but it's really an exciting time for crypto for sure. And last thing I'd add to this is I don't think that the market has priced in how big of a change this is going to be, that assuming that there's no disastrous glitch, which is a possibility, by the way, it's not a 0% chance. 5%, 3%, 1%, I don't know. I also thought that the DAO would be totally fine, which was one of the first projects on Ethereum that blew up terribly, and you know, look how that worked out. So assuming that gets pulled off though properly, I think that there's a lot of positive momentum and this inflection point for the price of ETH that the market hasn't yet realized. And I don't think that it's that they're worried about a technical glitch. I think it's more aligned to, they don't realize all of these little nuances to what's gonna happen to the monetary policy, to the number of people who haven't wanted to stake their ETH because they didn't want to take on the lack of the liquidity from phase 0 to phase 1, right? There's this period where until everyone moves over airplanes, you can't trade your ETH, you can't sell your ETH, it's stuck there for some unknown period, which, you know, might be 2 years in the end. And so people have been sitting on the sidelines and not really recognizing that this is going to be a really big deal when this takes place. So you can front run that trade, I mean, assuming the price of these assets doesn't go down continually the way it has over the last couple months. But it really is a big opportunity that a lot of people aren't paying attention to yet.
So let's map out this scenario. So it's you get these upgrades. The upgrades are going to allow for a lot more scaling. The application layers become more interesting. I think one of the things that's been difficult for the space is the absence of a killer app. So stablecoin has been terrific. I think it's been a great way of merging traditional finance with the digital world. You're basically tokenizing T-bills.
Can I push back on we don't have a killer app?
Yeah, of course, that's the question.
Oh, okay.
you can not only push back, but absolutely. So but I do think that even your reaction to that statement, if I were to poll 100 people that don't really focus on this stuff day to day, and it'll be more of the older generation to be sure, but it'll be like, where's the killer app, man? And what am I going to use this for? And you get this wave of negativity. Whereas in the internet in the mid '90s, I mean, this was not the easiest thing to use. It was quite clunky. You didn't have it integrate into regulatory environments until 1996 in the United States. So all sorts of challenges. So user applications, killer app, what is it? What can it be? How do you think about that element of it?
So I mean, I think we already have the killer app, and the killer app is that you have a politically neutral and global clearinghouse, which in Bitcoin is clearing, you know, one single asset, which is Bitcoin, that can't be manipulated by a government or a central bank. I mean, I think that is the killer app. Mm-hmm. That is what's so powerful here. Mm-hmm. In Ethereum, you have a politically neutral global clearinghouse for any type of activity, and that activity can be crypto native. It can be NFTs and metaverse. That some people here might be really bullish on the metaverse and NFTs. Some people here might say it makes no sense to me, and I think it's going to zero. What's the killer app here is that the protocol is neutral to the activity. It's neutral to the request, and it needs to be that. That is what's so important here.
So what can we build on it, though? So
Well-
it is the remarkable feature.
But hold on, let's keep going here. It's important to recognize that a lot of people, when they talk about these killer apps, or they wonder how will real businesses use these protocols. I get asked this all the time. Ethereum this year is on track to probably clear 15 to 20 plus trillion dollars of value moving through this protocol. The number is probably higher than that. I haven't looked in the last few months. That is an enormous number.
With no supervision.
With no supervision, and that's not JP Morgan saying we're going to use it to clear our tokenized whatever. A lot of people are looking to how those businesses will come and play here, and I'm saying, who cares? There's $20 trillion moving through it regardless, and it doesn't matter what the activity is. And what I like about being a holder at that base layer, that tokenized base layer, is you don't have to speculate on the price of any specific vertical. You're not speculating on which DeFi application token you want to hold, which NFT you think is going to be the winner. And the last thing I would say here is that, in the mid-90s, if we applied that same thinking, what's the meat space, the real world business that's going to validate why the internet's going to be valuable, it wasn't UPS or USPS, the postal service, saying, we've got these new terminals, you're going to be able to come into our post office and you could send some electronic mail. I mean, that's not what was valuable. What was valuable was that these new businesses and use cases emerged that were more native to the protocol or the technical standards. So social networking was something that wasn't a real world business. I mean, maybe some people were running some like social clubs in their local cities, but it was a completely new set of companies, the Amazons, the Googles, the Facebooks, the Instagrams, things that were native onto that technology that really was where the value was. So it's important to apply that thinking here and understanding that these politically neutral networks are very important. That one thing that's changed here is, if you think about the real world, is a little bit meta here. I don't know if anyone took any substances before, but when you think about everything you interact with in the real world, everything kind of exists in these binary states. This is art, this is money. But it has to be one of these two things. And I have a bank account with a checking account and a savings account, and then I want to move money from a checking account into a 401k or an RSP. But the account states are closed by default. You have to ask permission to connect those things together. What's so cool to me about Ethereum is that the default state is not so binary. It kind of sits in these superpositions where it's not a 1 or a 0, it can be both at the same time. The NFT could get fractionalized, and then those fractionalized CryptoPunk shards turn into money in some type of community. Or then those fractionalized NFT bits could act as collateral in DeFi and Maker, if you could figure out a price. When the state doesn't get forced into these fixed positions and can be more open and expressive, there's just so much potential for what can get built here. So that's how I look at the killer app here is recognizing these non-binary states, and that is a very powerful tool, and it will allow people to build all sorts of applications and use the technology in really interesting ways. That is the killer app.
So then, as we build on these protocols, you now have regulators. So talk about a regulatory shift. We went from a year ago, 2 years ago, regulators being faintly interested in stablecoin and everything else was a bit of a joke. To today, where we have President Biden coming out with a executive order paving the way for more open discussions on crypto and more friendly discussions in the United States. The Canadian Senate actively seeking out advice from the community and ways of enhancing things. How important do you think the regulatory sphere is to encouraging a lot of the growth that you're discussing? And can tech solve some of the regulatory concerns fast enough where regulators recognize, there's a tech solution for the thing we're worried about, or do they use a heavy hand that stunts the growth of the space?
I mean, I think we're in very much a heavy hand kind of phase of the narrative right now. Certainly there was less pressure on regulators well, from the early days they weren't paying attention to it. There was some light talk in 2013. There was a C-SPAN hearing where every U.S. agency kind of came out and said, we don't know enough yet, but we don't want to hinder this. We just need to see where it goes and build new tools to ensure that we can monitor the behavior in an appropriate way. Then as the space grew in 2017, they woke up a little bit, and then a bear market said, well, maybe you don't need to do your homework today. You have an extension by a few years to forever. And it looks like the forever didn't come because the space didn't die, and the few years turned into 2020 and beyond. And there's certainly, for people who want to build businesses, I'll talk about Canada mainly here because it's where we are. For people who are trying to build businesses here, depending on the type of application you want to build, there's some serious, regulatory risks. Running an exchange, if regulators aren't measured in how they're approaching the space, there could be risks to people building wallets, people building smart contracts. So there's very important conversations that need to be had with regulators who are looking at this as the Wild West. Their default answer is it uses a lot of energy. I'm not saying that these are the right answers, I'm just saying this is how they're thinking about things. Here's a space that uses a lot of energy and it doesn't create any value. Why do we want this here? We should get rid of this. And so, we formed this Canadian Web3 Council to act as like one voice in the space. I don't want it to be the only one. I'd like there to be many people engaging with regulators to try and help sway their understanding of the asset class, and not just saying, why would you want to use a mixing service, which is a tool that you could use to obfuscate your transaction history of your Bitcoin or your Ether. And the response to those kind of things usually is, why would you want that unless you're some type of criminal or trying to evade sanctions? We should just ban all this activity. But then you can point out, I said to someone on a call a few days ago, why don't you send me $5? And if you could just print out your last 36 months of your bank account history and send it to me at the same time, that'd be great. And he kind of laughed, and it stopped him for a moment because he hadn't contemplated that there's a real reason that you might want privacy baked into transactions, and that there's a pro and a con to all of these regulatory concerns. So engaging with regulators, as much as sometimes it can be quite headbanging against the wall, it's very important. And I think that depending on the applications people want to make, need to be cognizant of those risks. I think it's a little unfortunate because I think it's going to slow down the adoption of the space. But I don't think that the space will go away no matter what Canadian government or the US does. I think that there's just too much momentum in the open source community and space. There's too much community there. Maybe Canada, unfortunately, just gets cut off from the activity, and the centralized platforms box you into only being able to participate with in a certain number of assets or exposure to certain services and activities, like you can't lend or you can't actually touch DeFi. That would be very unfortunate, but I don't think that the space will stop. I think it'll just move into other jurisdictions, and people will be more anonymous and have a wallet and do their homework. And in 10 years, this space will have disrupted all of that centralized, top-down, heavy-handed regulation that prevented them from participating. So I don't know how this plays out, but a lot of my time now is spent trying to ensure that we don't end up in that position, because I'd hate to see a dark market and light market like environment where you've got just two flavors of DeFi. You've got this watered down KYC'd AML whitelisted addresses, and then you've got the other people that are doing all the really fun, cool experimental stuff.
How are we doing for time? We're good, eh? Yeah, good. Okay. Okay, so on the regulatory side, as you described that, the one focal point that I have related to that is how do we think about centralization in that world? Now, and it's complicated to the extent that you could end up with a lot of these fascinating technologies self-selecting to soft centralization in some way, shape, or form.
Soft centralization?
I mean, soft in the sense that it's not that there's a singular centralized entity that's taking decisions.
Oh, I see.
But you can still have the government say, well, wait a minute, the Ethereum Foundation is centralized enough.
Mm-hmm.
So is E2 a security? Maybe. I don't think that'll happen, but I just put it out there just as an example. Or or a tool like Lido, becoming a large enough player in the staking space that it's like, well, wait a minute, they're a third of staking provision. Is that centralized enough? Is that really decentralization as it was contemplated? So you end up with this convergence to a pseudo-centralized world, and then regulators kind of nudge it in that direction. Risk, bad outcome, I presume, from your perspective, but do you think that's a legitimate risk to the space going forward?
Yeah, I hope that as people are thinking about, like protocol design or how staking services are going to evolve here, that there's a way to do it where you can be thoughtful in the architecture to ensure decentralization or as much censorship resistance as possible. When I look at some other layer ones that are achieving scalability or higher throughput by trading off some of the decentralization, that concerns me. The question is, can a regulator easily write a handful of letters and stop something from happening or censor something? And so I think that there's the opportunity to be a developer or work on a team that's thoughtful about how can you prevent that from even being a possibility. So when I think about all the DeFi applications, let's talk about Uniswap, for example. Uniswap is the biggest decentralized exchange or front end that lives on Ethereum. That front end to me shouldn't be accessed through AWS. That front end should live on IPFS, and that should be the access point first, not AWS, because there's kind of this funny thing where if the notion is consumer protection or investor protection, that's what a regulator is concerned by. There's this world where what happens is some derivative or a tokenized share of whatever lives on Uniswap, and the regulator writes a letter to the Uniswap Foundation or a handful of players on Twitter, and what they do is they take it off the front end. They go, no problem, we'll just block that specific token address on chain, and it won't exist there. But the issue with that is there's this potential outcome where someone's going to take that back end code, spin up a new front end, and maybe that new front end has some malicious code that's inserted along the way, and the investor actually didn't realize that they still want to access the derivative or the tokenized stock, and they're going to find an access point, whether it's the Uniswap front end or something else, and they ended up getting scammed from their funds because they interacted with the wrong front end. So, which would defeat the purpose of what the regulator was trying to achieve. But I think that people who are building these applications can understand this dilemma and think, how do we be DeFi first, and DeFi all the way from how the front end interaction is going to take place, where the code lives, is any part of it off-chain versus it's fully on-chain, are there backups being pushed to IPFS, maybe there's a way that the front end could have some way, like I'm not a coder, so this goes to Paul who works with me at ETHCap, but maybe there's a way that those front ends can have some check mark or something that's ensuring that it's the correct contract you're interacting with and not something that's been altered. Those things are going to become increasingly important. Yeah.
Okay. Rapid fire. Ready? Rapid fire questions? I got them written down just so I don't forget. And then we'll go to some Q&A. So just quick reactions. ETH will have more market cap than Bitcoin.
Long term, I think probably. Only in that I'm not anti-Bitcoin because I still hold it there. It's still alive? Okay, good. No, it's Bitcoin to me has captured, and there's no competition to Bitcoin in the store value hedge against. It's a check on central banking policy. That right now, some people will say, well, everything's correlated and it's not going up. And Peter Schiff is very happy on Twitter these days, saying like, look, I told you, Bitcoin is not gold. That's fine. He can do his thing. But Bitcoin has cornered this narrative, I think, on hard money, store value, first digital asset, invents a whole category. But to me, it's competing with the above ground gold valuation and maybe a little bit beyond that. So there's a bit of a ceiling, I think, in what that can be. Now it could go higher than that, but I think that for now, that's the corner that it's playing in. When I think about, and I don't want to say Ethereum because as much as I work for Ether Capital and I'm obviously bullish on Ethereum, I recognize, maybe it's not Ethereum, maybe it's another smart contract platform that displaces it. I think that the idea of a politically neutral clearinghouse that would capture all of the world's economic activity that would get tokenized and exist on one of these layers is more valuable than just the above ground gold valuation. I look at it as competing with the valuation of internet infrastructure and those like IPv4 at the time, and I don't know what we're on now, IPv6, but that is more of what it's competing with, and I think that the potential of that is much higher. But I don't get too in the weeds on which one and today and when. I mean, I don't think it matters. I think that these things are either all going to win, and the community, the people have spoken that they want access to these protocols and these assets and the flexibility of this type of architecture, or something went wrong and we screwed it up and it goes away. And I think that would be a horrible outcome.
Yeah.
So.
Okay, next rapid fire. Digital ecosystem. So central theme is obviously you're seeing this as a growing pie. And I think in that spirit, I mean, that's why you have a community like this together. So that's terrific. We've taken a very similar position. Digital ecosystem now is $2 trillion. Next 10 years, where do you think we are?
10 to 20.
Yeah. We've used 10 plus as a number. Do you think to get to 10 to 20, you need traditional assets to be tokenized?
No.
No. Interesting.
I don't think so. I think that you're going to have this period where, despite what's happening right now, where people are concerned in markets on where the safety zones are going to be, they'll come back to crypto, whether it's in 6 months or in 2 years. I don't know, but there's just a stickiness around crypto, and the narrative and the primitives are so strong. I just don't see how it can be ignored. And so market forces will bring people back here. And so I don't think it matters if tokenized Tesla exists in Uniswap.
Could be a 99.999% dollar devaluation too.
Sure.
It doesn't matter.
But this is an important thing, because a lot of people, especially in the early days in that 2013 and 14 and 15 era, people were saying, this asset class can't be legit or something real unless financial institutions legitimize it. And I always push back on that because I just didn't like it. But I think you've seen that we've gotten to $1+ trillion kind of without the banks really having their own products, their own custody access points. Now, that's not for me to say I don't ever want any of their participation. That's not my point here. I'm just saying that the space has actually done a really impressive job of building its own tooling, its own communities, its own companies that are rivaling the size of these traditional institutions. I mean, Coinbase, I forget what the market cap is today, but the fact that you have a business that's 8 years old, 7, 8, 9, I don't know, that now has this $40 to $80 billion valuation with just so much DNA and understanding of where the space is going is really, really impressive. And you can't just inject that DNA into a couple employees who work at a traditional institution. You can't put that into the culture, that understanding. So I think that's really exciting, that the space, you can't just port over to a new group. So
do you, two more and then we'll throw it over. Do you think an application on one of these layer
back
one,
to the application thing again?
Yeah, no, it's an easy one, isn't it?
Oh.
Do you think some user application that sits on these on one of these layer ones can be worth more than the layer one itself? Like, do they become utilities at some level where we just think of them as train tracks and people are like, take it or leave it?
You're going to have some value at that base layer to ensure security for whatever's existing on top of it. Otherwise, there's a financial incentive to break the protocol layer. So there isn't a world where, at least someone who's more technical than me maybe knows that you can do this, but as everything I've read so far says, you have to have some value in that base layer and significant value to ensure security of the activity taking place on top of it. So I don't think we're going to have a 1 penny Ether or a 1 penny smart contract platform securing $1 trillion of whatever. You would just go and buy all the penny Ether and then break the contract and break the protocol and steal the money.
Yeah. Okay, last one. Number one sin of an investor in the digital ecosystem or in crypto, or just number one lesson. Like, look, we're the institutionalization of the asset class is clearly coming. The discussions that we're having are largely with digital asset working groups who are working really hard to figure out how it fits into their portfolios, how to think about the risk very thoughtful stuff. It's a haul because you're in, per your observation, you're in these ecosystems where the DNA isn't internal to the organization yet, but they're trying and they recognize, and a lot of it's coming from the top too. They look out the window and they're like, oh my God, this is disruptive for the things we're doing too, like real estate.
Yeah.
So I think there's an increasing recognition of the power of these technologies. So then as institutions in particular start to contemplate how to integrate these into portfolios, what should they avoid? I mean, what are the high level lessons?
I'm going to answer a slightly different question because it's more just a general, like, people who are new to the space, what's the tricky thing? And that really is always chasing the flavor of the week or the month, especially like retail investors, oh, this new token has a dog on it, let's buy a bunch of that. But they're not doing, the advice I give to basically every new entrant to the space is to go and understand, first with Bitcoin, why did Bitcoin get invented? What did Bitcoin change in computing science? What did it change for the potential of an asset class? Understand why it exists, and then read about what did Ethereum change. And I'm not saying you have to go and buy either of these assets. I'm saying you have to have a foundational understanding of why were those things 0 to 1s? What did they change in the conversation globally? Then you can look at the token with the dog on it and decide, is that a 0 to 1? Or is that just something that's hot and pumpy? And I think you can apply this foundational knowledge to everything else that's happening in the space, and you can find where you want to play. You want to sit at the base layers, you want to speculate on new verticals, but at least you have some framing around what's taken place. You don't even need to do research into the various cycles, right? There's bull markets or price increases, and even before, a little bit before my time of Bitcoin up to $60 or $70, price crashed to like $2. Oh my God, Bitcoin's over, it's done, the sky's falling. For me, then it was around there up to $1,200, and then it crashed down to $200. My mom was saying, you should sell and go buy some new jeans. I didn't, but there was that cycle. So you could also just do some reading into understanding that the volatility is not new. I think new investors are saying, well, the space will be much better when the volatility isn't there. That's really important. It's like, but the reason you're here is because you like the volatility, because the volatility works also to the upside, and that's why you wanted to own some Bitcoin to begin with. That seems to be lost on a lot of people. But understanding that these assets move in cycles, but that as a whole, these developer communities, the people who are here, despite the price of these assets, isn't changing or going away. And that to me is the reason I'm here, and I think what's so cool about the space. And so you're just trying to get new investors and institutions not to get spooked by, oh my God, Bitcoin dropped $5,000 yesterday. You're like, welcome to the club.
Yep. Yep. Awesome. Questions? Oh, should hit it earlier.
What's your third favorite coin?
Here's such a politically correct answer. I don't really mention specific tokens, partially because of my job at ETHCap. I'll tell you what I find interesting. I do think that there's demand from a lot of global retail investors to use platforms where the transaction fees are more affordable or accessible. One issue right now on Ether, I describe it as the base layer is everyone lining up at the Supreme Court and saying validate my activity. And so the people in line can be someone looking for $1 million mortgage on their house, and then the person behind them has a $5 parking ticket. And they're both paying this huge transaction fee to get time for the Supreme Court to stamp the activity. And so obviously the $5 parking ticket doesn't make sense at Ethereum layer 1, and it has to go somewhere. And it could happen on Ethereum layer 2. I'm very bullish on ETH layer 2s. But right now you've seen a lot of interest in competing smart contract layer 1s, where the transaction fee is a penny or a fraction of a penny. So I think that those will continue to do well for a while. Whether those end up competing with ETH layer 2, who's also made some design changes to try and get scalability and higher throughput. I think those are safe, good bets to make. That's kind of where I'm focused a lot, is trying to figure out how that's going to take place and understand that long term what probably happens here is that Ethereum's base layer turns into account state or data availability. So that's your bank account and the state of your bank account. But the tapping of your credit card and all your buying an NFT, go buying a beer, spending $1 on something else will take place on a layer 2, on an execution layer. If you can figure out how to invest in and around that, I think is what's going to take place in the next 2 or 3 years. And really exciting, but it's kind of unclear how you play that thesis yet.
Thank you.
Next question?
I have a question. So you talked about earlier in your chat about how regulatory sees DeFi, and you talked about this weird world that you don't want to see, where there's like a DeFi light and a dark, interesting way of doing DeFi. What have you noticed from regulatory's attitude to DAOs? And
Not on their radar yet.
Oh, okay.
Pretty far out.
In another way, what's their attitude to decentralization?
So, I haven't had a lot of conversations yet with any government or regulators about DAOs, so I'm going to speak from just what's being discussed at various tables and things. Regarding DeFi, the concern is that you have all these rules that some are local to Canada, some come from a more international group, so one might be this group called FATF, the Financial Action Task Force, and they assign a bunch of rules on how transactions should work. And the rules are more, hey, individual countries and banks, decide how to interpret and implement what this guidance is. And so this applies to traditional finance, but the question is, how does it apply to crypto? And so you're seeing right now these FATF, what's called the travel rule, really being discussed, where what happens when you want to withdraw from your Coinbase account to an unhosted or self-hosted wallet, that term that I absolutely hate, but nonetheless we have it. Do you have to KYC that wallet? What happens when you want to interact with some form of DeFi that doesn't have KYC or AML, anti-money laundering, set of rules or tooling applied to the smart contract or who can interact with it? That's how the banking system is set up. That's how regulators understand every trade, every transaction, every financial, me to you touch this, you did that. It should be applied in the traditional world, and they're wondering, how does it apply here? So of course you've got this very oil and water like system where DeFi to me doesn't work if you apply KYC and AML to it. You're going to break fungibility of the specific token. You're going to say that token's worth more because it had KYC, or it's worth less because it had KYC, and then you've broken composability, right? The ability to like money Lego the assets and the protocols together. So regulators don't know how to wrap their head around it. They're less concerned about the innovation. They're more concerned about, here's the rules that we have, and those rules are getting longer and more strict, and now they're turning their attention to crypto. So this is where a lot of, as I was mentioning, my time is spent doing that. The DAO thing is way too far down the line for sure. DAOs, though, I would mention there's kind of this weird risk in a DAO where, what are the tax obligations, or what are you personally taking on as a member of a DAO, where the DAO does some type of activity, it buys an asset, it sells an asset, you didn't even vote on what the DAO did, but you're technically an owner of part of that treasury. Yeah. What is your tax obligation in your local jurisdiction? These are things I promise you CRA has not thought about yet. Regulators haven't thought about this yet, but those are real questions to be asked and will need to be solved and litigated, but they're not in the next 6 months. I will promise you, that is like a 2 to 5 year out conversation.
Just one really quick add on DAOs. Take a look at what they've done in Wyoming. Not just, obviously, different jurisdiction completely done it. But to the extent that there's regulatory competition, Wyoming becomes very interesting because Caitlin Long spent an inordinate amount of time working with local legislators on just coming up with a coherent framework for all of crypto. And they've done it, including legal recognition of DAOs. Now, it's a footnote in the context of everything being discussed globally.
Yeah.
But if people are then hunting for benchmarks as they try to get up the curve quickly, it could become a very interesting test case for other jurisdictions to try. So it's worth studying. There's a mountain of work, but it's a very interesting test case. And Wyoming's interesting to the extent that they were the first district in the United States to legalize LLCs. So they had which second mover advantage, right? It's a good lesson in second mover advantage. Delaware now pretty much dominates, but Wyoming was the first mover. So it's an interesting case. They're doing all of this because they recognize that their source of income, their source of wealth creation, coal, is in structural decline. So they become a very, very crypto friendly and crypto consistent state. So it's worth taking a glance at.
Yeah. Thanks for those answers.
So I'm terminally on crypto Twitter, and so it seems
Exhausting.
What's that?
It's exhausting.
Yeah, absolutely. And so the amount of times I've heard that the merge is not priced in almost seems like it's paradoxically consensus now. And so, like, does that speak to how siloed crypto is in general, or like, who is missing out and why are they missing out on this pricing?
So, the transition to proof of stake, I didn't think was priced in. People didn't recognize how big of a moment that was going to be. This idea that, the Bitcoin having this priced in, the way I always push back on that is wondering, well, when is it priced in? I mean, is it the day after this halving? Is it 1 year before the next halving? Have we priced in literally every halving from now until the end of time? Who knows? I do think that there's a lot of people who assume that the merge would either never happen, or it'll blow up on the launch pad, or they just didn't want to take on ETH and lock it up because of the lack of liquidity. And so there's a lot of idle ETH waiting for that to happen. And in fact, you can see this in the queue, right? That you can't just have an unlimited amount of ETH. You move from ETH1 on to ETH2 every day. There's a set number of validators that can be added daily. And so that queue is actually getting longer. So when ETHCap, we staked, 10,000 ETH back in February or December, whenever that last batch was, probably should know this. The queue might have been a day or two. And now the queue is a couple weeks. As we approach the merge and more people are understanding, that there's this limit on how many people can participate, and they're going to get a clip of those transaction fees and they're going to get this yield, I think more people will enter the queue, and the demand to buy ETH, is going to go up. There'll be less reason to sell. There'll be less reason to want to unstake your ETH. I think there's more people coming in than there will be going out, and so the price pressure, I think, will be pretty substantial. The last thing I was going to add is, I don't know. I think it's a big moment. We just don't know when it'll be, and maybe it takes a couple weeks for people to recognize this, the opportunity. But it's really a big moment for ETH, and it also will change. It'll be interesting to see the dynamics between the other layer ones and how those either price up or price down as people go, okay, well, this network just switched to proof of stake, so that's no longer a competitive advantage to us. So if they were pushing an ESG narrative, that goes away. The other thing I don't mention is stakingrewards.com, that shows all of the layer one proof of stake networks and what percentage of the circulating supply is being locked up. Ethereum for most of phase 0 ETH1 was 4 to 6%. Now I think we've crossed, Victor for sure knows this, we've crossed 10% at this point. That is still small compared to all of the other networks. Now I don't know if 50% of all Polkadot has been locked up because there's just nothing else to do with the assets, or because people just want to stake, but I would assume that the percentage of Ethereum that gets locked up is not going to be 10%. And so there's kind of a few different ways that this is very positive, in that if a lot of people stake, then some people go, well, then your yield is going to go down. Like, Sure, but then there's no circulating supply, and then you would expect there to be upward price pressure. So it's good for you either way. If not a lot of people stake, and there's all this daily transaction volume taking place, you're splitting those fees with a smaller number of participants. So you're going to be indifferent to either of those scenarios.
So if I understand correctly, it's the incentive right now is to use Ethereum, not stake it. But when the merge happens, then you're going to be further incentivized to stake, and thus there will be less circulating supply, and thus that'll help with the price action.
It's more that right now people don't want to stake because they don't want the lack of liquidity. You know, if ETH goes to $10,000 tomorrow and you're on ETH2, unless you've done some form of liquid staking, you're stuck there until some later point in time. So most people have sat on the sidelines, and they also want to see that the merge takes place, you know, without any technical glitch, that it gets pulled off okay. And so I think more people are on the sidelines than the community is realizing. You know, institutions don't have access points to stake. A lot of the exchanges haven't integrated ETH2 staking yet because of a whole host of reasons. When those things come online, whether it's the day that the merge happens, 6 months later, 12 months, I don't know. But I think that there's a real catalyst for the price of ETH. And so a lot of people who are, you know, sitting on Twitter all day writing, you're reading they're bullish because they understand kind of what's going to change in the supply mechanics here and are really excited by it.
Thank you.
We're going to need 2 more questions.
I think you just briefly touched. Can the crypto in general hedge against inflation, or is it too early to tell, or it has nothing to do with the prices?
My answer is long term, yeah, that will be part of what I was saying to Benji, who's somewhere here. You know, that the weighing machine, you know, if you think of like markets, this is the, you know, famous quote of short-term markets are voting machines, long-term they become weighing machines. I think that a lot of the people or a lot of the money that's moved into the space in the last 2 years may not have the same level of conviction as someone like me who's been around for 10 years and will say like, I'm gonna hold forever. And so the market is trying to figure out, you know, is this a hedge against inflation? Is it competing with gold? Is it a check on central banking policy? Is it a technology layer for other verticals? The market is trying to figure out how to value these things, and so it's going to be volatile during that period because a lot of the money that flows in is probably more of a momentum trade out of FOMO rather than a thesis trade. But I think long term, I would expect these assets to sliver into that hedge against inflation part of a portfolio alongside gold or technology. For like Ether, I think of more of as a technology bet than a insurance bet, and Bitcoin is like the insurance bet against bad monetary policy. But you know, when that's true, I don't know. I think that the fundamentals are certainly there, but I think it's too hard to tell how globally people are viewing the asset class, and there's probably friction. People saying it will be, and then people saying it won't be. So we'll know in 5 years. Come to a meetup in 5 years, and we'll see.
Because it's the inflation.
Yeah.
Today.
Sorry, say that again.
Today is the good time to test it.
Yeah, you would think, but again, you know, in moments of uncertainty, people are looking for safe havens, and I don't know where those safe havens are right now. And I think that the market in general is figuring out, like, is that going to be real estate? That'll react to a rise in rates. Is it going to be equities? Maybe everything's overvalued and high levered. Crypto is risk on. You can't hold cash because you're going to get inflated away. So there aren't good obvious answers, and you're watching the market try and figure out, you know, what the correct escape valve is or was. But this is why I'm long crypto. I'm not momentum trading it. I'm not trying to day trade it or time it. I'm just saying, you know, in 2 years, 5 years, 10 years, were the fundamentals there to build up being a solid asset? And I think the answer is yes. This is why these assets exist.
And 1 or 2 quick observations to add to that. Despite the rise in inflation that we've seen, long-term inflation expectations are pretty well anchored, which is staggering, right? So we've thrown a lot of inflation at the bond market, and you have 5-year forward inflation expectations somewhere between 2.25% and 2 3/4 around the world, which is very consistent to what a central banker would call price stability. So for all the talk of inflation, the long-term expectations haven't really been rattled. So I think the proper test for crypto is going to be if you get a sudden devaluation. If you get some form of a currency crisis, I think that's going to be the test. And what do we know about those currency crises? They have to come suddenly, right? These things can't come gradually, and the imbalances are built gradually, but the actual occurrence is very sudden. And I think that's going to be the real test. So something like, which is going to be very difficult to replicate in a rich economy, but something like what we've seen in Turkey for parts of last year, in Argentina, and areas like that, I think that's where you're going to have the proper test of crypto. And as a unit of collateral, I think it's probably underappreciated. I don't know how you feel about that, but if the Lightning Network takes off, everyone's going to hold a little bit of this stuff just to use it. And I'm sure there are a million similar examples in the context of Ethereum that you can point to as well. But as a unit of collateral, and then the value of that real collateral in the event of a sudden lasting jump in price levels, I think will be the real test, more so than the current period.
So last question.
Hey Brian and Mercer, I've known here. I wonder what your vision is 20 years from now on the financial industry. That is, how am I going to buy pizza, or what is going to be the world reserve currency in 20 years?
I mean, my quick thing is I do think that you will see way sooner than 20 years central banks add probably first Bitcoin to their balance sheet. I mean, it's a great move if you can just hit the print button on this one thing and then get this other asset as a potential hedge. Even if you're wrong, I mean, it costs you almost nothing to print a few $1 billion and buy some crypto. So I think, no, it's kind of true. No, I do think you're going to see central banks at least discussing, should they add these assets to their balance sheet. I think that they absolutely will in far less than 20 years. I would expect that in your daily life, you will hold a number of currencies, and some of that may be your local Canadian dollars, some of it can be tokenized USD, some of it can be ETH, Bitcoin, and maybe some of it is a fractionalized NFT. I think people are really not understanding the power of I don't want to call them memes, but the ability to create social capital around a narrative is really, really powerful. And you watch that take place in the last year and a half around a number of these NFT projects like Bored Ape Yacht Club and CryptoPunks and Nouns, that those communities get very sticky, and then they can coordinate themselves on Discord and start building applications. And the NFT, in a way, like if you think about Bored Ape Yacht Club, specific NFT, in a way it's a protocol. It's a base layer for a whole bunch of other things. And that could be a base layer asset for a metaverse. It could be a base layer for fractionalized ownership in forms of money. It could be a base layer for collateral in DeFi to borrow against. So I think the lines, again, when you go back to that idea of these things are not so binary as people want to make them out to be. And when you delete that worldview, it's very freeing, and it's just too limiting to look at these things in these very fixed state ways. I think people will be paying for their pizzas and all sorts of weird things, and the receiver of those dollars or CryptoPunk fractionalized 6342 NFTs won't care. The markets potentially, something like Uniswap makes it so frictionless to say, I don't want your fractionalized NFT as a form of payment, and you want to pay for it, and that's fine. In 20 years, I would hope that we've connected all of these financial systems together to allow the payer and receiver to transact in whichever currency they want. Those are things that don't exist really in the world today, but we're getting close to that being a possibility.
Yeah, I'd add just a slight macro nuance to that. So I think what Brian describes completely revolutionizes the way we think about capital and labor allocation. You're bringing people closer together. Your talent is being rewarded for whatever they're delivering, and it can be in things that today seem a bit peculiar, but in the end hold an enormous amount of value. I would add at the macro level, the generational friction that we've created with current policy and current asset prices is massively underappreciated. So think of what rising PE ratios do in equity markets, bond markets, housing markets, right? Housing is completely unaffordable for the younger generation. If I were to benchmark myself 30 years prior and say, okay, could I replicate the lifestyle that I had, which was not fancy by any stretch, but I had a place to live, I had a car, it was comfortable. You could imagine saving to put a down payment on it. You can't do that now. I mean, if I were to look at the amount of student debt that you have, you're 28 years old, you're starting to be beginnings of your life, and you're like, oh my God, like this, I'm at the height of austerity. So what asset prices have done is it's created this generational friction. Who's valued from that rise in asset prices? The older generation. Who's suffering? The younger generation. There's no political resolution for that friction right now. Now, it's not to say that digital is the thing that's going to close that gap, but it can, right? And it can because the younger generation is forced into austerity, right? And the older generation is just hanging out. So who's going to get haircut on persistent inflation, right? That's my son. I'll call him that. He's a good guy. That generational friction means this older generation is they think they've accumulated this wealth from rising asset prices by their genius. They do. If you talk to them, it's true. It's like, well, I'm so clever. That's why I have a house tax free that I bought for $1 million that I can now sell for 10, right? So think of the amount of wealth that wealth creation that's happened just through rising asset prices. Now the younger generation comes up, and by force they have to be austere. So then what do you do? What does austerity mean practically? Small apartment, biking around, maybe renting a car every once in a while, no fancy holidays, and then what's your outlet? Digital. Think of the metaverse as a place where you want to start a company. You start a company in the real world, it's painful, right? It's painful. You have an idea, you're a designer, let's say, you're an architect, you're whatever you are. You start to apply that craft in the metaverse under whatever name and whatever shape you want to take, and you do amazing work, and I love your work. I'm going to hire you. I'm going to hire you to build a virtual space in Decentraland or whatever your metaverse is, and then all of a sudden at 25, or 28 or whatever it may be, you're living in a tiny quarter of data, and you started a business with a very small amount of capital and a great idea and a lot of hard work. It's the definition of austerity, right? So now, if we enter this inflation persistent world and blah, 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 what does a high PE ratio mean on all these assets? Their expected value is going to go down. Your expected return on that asset is awful. And then the younger generation, forced into austerity, migrates to what? To digital. So then you end up with this generational divide that gets fixed, not through some fancy policy, not through think tanks or any of these things. It comes through the natural progression of a market. And digital is a solution to that problem. So I think it can have just an absolute profound impact on this generational divide as well. Which I think is, look, if I wish I were my son calling me on my little phone here saying, well, what's the future hold? I mean, it's tremendous for that cohort. It's tough in many ways. It seems unfair because you can't buy the house and you can't do all these things that the generation before. And I promise you, that is a gift. Stuff is an anchor, right? You don't need stuff. You need ideas. You need the guts to enter the world and do interesting things. And digital is going to be that sphere for sure. I mean, I'm super optimistic about it. Wish I were 30 years younger.
This has been a fascinating conversation. I think we could talk all night. Marcel, if you want to wrap us up with the loot bag?
Oh, look at this.
Very important.
This is,
Say
I
thanks to
forgot.
us.
This is the, so I had the pleasure of Brian's company. He has a remarkable record collection. And so this one's for fun. This is Cassius Clay. Right, this isn't original. It's just him speaking. I mean, you got to have Cassius Clay belongs.
I don't know what this is.
It's the.
Thank you.
It's the. That's the fun one. That's the look. And I thought of you looking at this. I was on Queen Street and poking around, and I was like, look, it's a mindset thing. The thing I love about Brian is the mindset. You hear him talk about this stuff, and it's like he started from ground zero trying to buy a used computer, and you've taken it, and just by keeping your mind open and thinking hard and interacting with people, and you're not coding, you're not developing, and you're on it, and it's the mindset, and Cassius Clay had the mindset. He's the greatest, right? And he said it enough where he was like, well, I better be, or else there's going to be a problem. And then this one, this is a keeper.
I don't have this, so this is perfect.
This is a keeper. So this is Miles Davis Quintet, and it's pressed in Japan. So it's if you've ever experienced the precision of Japan engineering, it's just awesome. It really is. Oh, and I forgot the
More mustaches?
No, a card. And because I knew we were going to be talking and all that
Did
stuff.
you write
so
in this card?
I didn't even write in the card because I think you can use the card. It's a beauty.
I'm seeing.
That's a business.
I shouldn't say this in recording. I went to a friend's wedding. I went to a friend's wedding last summer, and I pretended to forget their gift. And I'm seeing them this weekend. And I said, I'll mail you something. And they said no. So now I have a card for the gift that I'm going to pretend to give them. So thank you. Wait, you didn't write this.
Pardon me?
You
No, I didn't.
Yes, there's no utility in what I can do with this card. Thank you.
All right, awesome. Thank you so much.
Thank you.